Hey, welcome in. You're listening to a daily editorial on the Cornell Economics Report. 18th of April. I've got David Morgan on the line with me right now. We're doing a bit of a remote in the sense that David is way over in eastern Washington driving. Big Al is in the studio here in northwestern Washington State. Hopefully, this will be clear enough because I know David has some very, very interesting things to say right now. Dave, I'm getting all kinds of conflicting information in terms of let me say this: not conflicting information, but conflicting opinions on what's going to happen with the price of gold. The for lack of better terms, mainstream pundits seem to be saying, it's over, look for 1,100 or perhaps even less an ounce. I don't believe that's the case. I'd like you to comment on that, number one. And then number two, I am pretty convinced that what happened a week ago, specifically last Friday, was a concerted effort to take down the price of gold. People agree with me, people disagree with me. We've got some folks on our website who say that's balderdash. It's just the market is the market. Boy, I got to tell you, man, last Friday, I don't think that was the case. Let's start with that. Could you give an opinion on that one? Do you think it was a concerted effort to bring down the price of gold, Dave?
Well, it's both, but primarily it was concerted because of two things. One, everybody that trades futures from a professional level uses charting, technical analysis. Now, there's always people on your website and mine that say, you can't use technical work in a manipulated market. Yes, you can. It works very well. So I've been telling my members that pay people to watch out for the $26 level on silver, watch out for the $15.50 level in gold. If they start breaching the downside, then we're really going to get smashed. And the setup was perfect last week, and it breached those levels for both gold and silver, and they just got crushed. Well, not only was it technically a setup to bring it down, but the amount, the pressure, the sales was beyond recognition. I mean,
Right.
the amount of naked short selling went into the history books. It was one of the biggest amounts sold that didn't exist in a very, very, very long time. So
Right.
these are people that know what they're doing, and there's no reason. And simultaneously, or nearly simultaneously, you had two big announcements. You had an announcement that the Pascalama mine, Derek, one of their Starship situations, $4 billion already invested, is on lockup. And that is some phenomenal amount of gold. I think it was 7 million ounces. I forget the number. It's a huge amount of gold. 700 million ounces of silver, I think, is the number. And that's off the market. Within a few days of that, the largest or second largest copper mine in the world, which I've been to, which is in Utah, is shut down because of a cave-in. It's an open pit, and the land slid, and basically made it inoperative. And that, I think, 15-16% of the domestic U.S. silver supply. And they mine quite a bit of gold. It's a copper mine, but they get gold and silver. So normally, if you're looking at the wheat market or the corn market, and there's bad weather, what happens is you're going to get a bounce up in that market because it's an event. It's maybe not a huge event, but it's enough of an event to move the market up because there's a disruption in supply known. Well, here you have a disruption in supply known, and yet the price gets hammered down.
Yeah.
Also, you got to look at one of the biggest influences in the mainstream media, which is Goldman Sachs. Goldman came out a few days prior to this and says you should short gold.
Right.
Hey, there were cheerleaders for gold not too long ago. So there's a lot of facts that line up to my opinion, which was or is that not only technically was it a setup, but that the amount sold is absolute evidence that the people want it down. The problem with the commodities market in general, and I'm free market, so I can't say it's like it should be changed, but you can hedge. I'm not against hedging, but you can also profit from the downside. So if you're Cyprus and you're going to sell gold, and you're going to try to rectify your balance sheet, you are not going to announce it. You're going to go off market. You're going to use a broker, and you're going to get as much as you possibly can for that gold. You're not going to try to broadcast your selling and try to mark down. Now, the Cyprus gold thing, I think, is like a red herring. I don't think it really had much influence. Maybe the people that don't know that that amount of gold is really almost inconsequential in the world of gold because it really wasn't that much relative to the gold supply. But it's still another added factor. So I think if you look at it objectively, you can't reach another conclusion than the shorts wanted the price down for profit. They wanted the price down more, in my view, this is my opinion, for psychological reasons.
Yeah.
Because, mom and pop out there were thinking maybe they should hedge and have a little bit of gold in their portfolio, and it's at a low. It's holding the 1550 level, and it's held out for quite some time. You got stalwarts like Jim Sinclair saying, before the move down, we're pretty low. I'm saying we're pretty low. We were. We're at a 2-year low. And so they're thinking about buying, but they held off. And all of a sudden they see this, they fall in the neighborhood in the gold market. Because now they see the volatility, and they're going to say, you know what, gold would have really hurt us bad if we had bought it. And so you're going to keep a lot of people psychologically out of our market.
Well, I'm glad you mentioned that about the psychological aspect of it, because I gave a speech at the GATA conference in Washington, D.C. probably 6 or 7 years ago, and my opinion on manipulation, which I gave at that time, as I said, for psychological reasons, I think it truly does exist. So, I certainly appreciate the collaboration on that one. David, last question. Gold is coming back this week, admittedly in fits and starts, but it is coming back. The Dow Jones Industrial Average is going down. If someone were to say, Big Al, do you think the price of gold is going to reverse and go back in an upward direction? I would say definitely yes, and I would say the reason that I'm saying that is because from a fundamental standpoint, I can't see it going any other way. You got the final word, my friend. Do you agree with me?
Well, in the short term, long term, I agree with you. Gold is going to go far higher. The bull market is not over in the precious metals because the bull market in the debt creation isn't over. And gold does do an accounting on the balance sheet of nation states, and that will take place at some point in the future. On the short term, we could see some more weakness in both the metals for a while. I wouldn't rule that out. But longer term, the fundamentals continue to get stronger and stronger.
No, I would agree 100%. Okay, been chatting with David Morgan. Dave, appreciate your time, my friend. You drive safe.